Hey everybody. I paid $250 for a 50-minute session with the Boldin Retirement Planning Coach, and we actually ended up going 75 minutes. I spent a lot of time in this software, and I'm pretty comfortable with financial tools, but living overseas, dealing with Medicare questions and Social Security assumptions, tax treatments, and being married to a non-U.S. citizen, I wanted to have another set of eyes on my plan and my inputs into the software. What I realized is this: retirement software is only as good as the inputs, and a few small structural mistakes can quietly distort your projections. And I rightfully saw that after this consultant reviewed my information. So in this video, I just want to walk through what he found, what I corrected, and whether I think the $250 for the consultancy was worth it. This is a consultant to look at the inputs of what I entered in. This is not a financial planner. And he made that very clear from the beginning. He said, this is not financial advice. This is only inputs. So this is not going to be a tutorial or a detailed look into my account and the nuances of his recommendations. It's just an overview of the nuggets he shared with me. And behind me, you'll see a screenshot of a video session as a reference. This is actual inputs from him, but an actual screenshot of my account, but you're not going to see the details of it, and it's not important anyway. So why did I book this? I'm familiar with software, but I'm not comfortable with this transition that I'm going in, and I'm trying to look for as much help as I can get. I've spent serious time inputting the numbers. It's very intuitive software, but parts of it are not, and especially when I'm not familiar with them. So living in Laos complicates things with Medicare, Social Security, and having a spouse who's not a U.S. citizen. And then when projections determine major life decisions, these assumptions really matter. And he was very emphatic about that when he said, yeah, these small things make a big difference. So confidence in this software isn't the same as confidence in your inputs. I've worked with a lot of data over the years, and we have a rule of thumb in analytics and data analysis: garbage in, garbage out. You might have a result, but it's only as good as the inputs. So having said that, one of the major things that we talked about was Medicaid and medical expenses and how I had them misplaced. My health insurance costs were in the reoccurring expenses, and I had to move them over to the medical expenses, because Boldin uses a higher rate of inflation for medical expenses because they tend to go up faster than general inflation. My wife's medical costs needed to be clearly separated because she's not a U.S. citizen and will not qualify for Medicare and Medicaid. And my Medicare-related assumptions also needed correction because I don't really understand them. I don't understand if I need them, especially if I don't plan to be in the U.S. Do I need them? But he says it might be a mistake not to include them because they are significant. So the lesson there is, if it's in the wrong bucket, the math behaves differently in the numbers behind Boldin. Another mistake was I had subscription costs I had in one-time expenses, even though I did have them annual. He said that for this purpose, if they're continuing expense, they tend to be susceptible to inflation. So he thinks it's better that I move those over from one-time expenses over, even though they're reoccurring, to the actual reoccurring section. That means inflation wasn't being applied correctly to those costs. And over time, that can compound into inaccurate projections. So it's better to be a little more conservative than to not be prepared. So the lesson there is small categorization errors and long-term distortion in the end results. Another item that he pointed out was, this is an important one for financial-minded viewers. So I had dividends entered in as passive income. I was kind of separating that. He recommended that I enter them in as a yield in the brokerage account, and also suggested my issue was I have some stocks that are dividend and some are not. And he suggested splitting the brokerage account into two accounts: an ordinary income to account for the dividend payers, and then the other one for capital gains. So the issue that causes there, though, is because Boldin is linked to my external accounts, then I would have to manually update those accounts every time I went in, rather than Boldin automatically updating those figures. And then he also identified one of my accounts. I incorrectly labeled the tax treatment versus capital gains versus an ordinary income type of gain. So the main takeaway there was how you enter in income matters just as much as how much income you actually have. Some of the bigger strategies we reviewed was Medicare while living overseas. He explained some of the eligibility rules around it. My initial thought was, do I need to include them? And he explained that there's a lot of penalties and it could be more expensive not to be enrolled if I end up applying for Medicare later in life after 65. And the implications were there for my spouse. And he actually researched after the video. He went and sent me a separate email explaining how I could make adjustments in Boldin, because he didn't know at the time how to make adjustments for my wife and not having Medicare. So he went beyond the video. And then he actually did some other research and sent me a follow-up email explaining a little bit more about Medicare. Social Security for a non-U.S. spouse. So he wasn't sure about that, and he made a recommendation that I talk to my financial planner. I did tell him at one point I was meeting an actual financial planner the next day who I'm paying to give me a more comprehensive plan, and he said that's excellent. He asked if it was a Boldin financial planner, and I said no, and he gave no problem with that. He just said, yeah, this is some points you might want to ask with them. They're the specialists. So he took no claim for himself for that. It was really very low pressure. He also showed me a way how to adjust my projections in Social Security if I don't think Boldin is providing the more accurate figures, because Boldin makes assumptions around my situation. And for 99% of the users, I said that I am a square peg in a system built for round holes. It's been like that my whole life living overseas. I always have issues that are not common, and so I'm always an outlier with some of these things. So there's got to be a way to manipulate and go around some of it. And Boldin cannot make those adjustments for 100% of the people, which is understandable. And as long as I'm within the ballpark, that's what matters. He asked questions around my IRA strategy. He identified that Boldin was accounting for a huge tax payment in 10 years when I had to remove my RMD. And he identified that to try and help me reduce my taxes, and showed me the actual chart that shows this, to look at this anomaly and plan for a better way to reduce that tax burden. And he actually showed me how to do it. One thing to note is he's actually working within my account, and any changes he made, it simulated what the impact would be, but then when he reset it, it went back to my original settings. So any changes he made, they came back, I would have to make them after our session. So I was very impressed with that. So around the RMD, again, he suggested using a standard deduction, a transfer feature. I believe it's in the cash flow section of Boldin. He used a transfer to reduce that tax burden and within the IRA account. And then again, he recommended coordinating with the financial advisor to get more information about that. We talked about filing status, single versus being married, and I said that I file single even though I am married, because she's not a U.S. citizen, and my tax accountant advised me it's easier if I just file as a single, because it would be more complicated since she's not a U.S. citizen. So this was very specific to my case. So I don't know if there's any other international expats who are out there. So this retirement abroad adds layers of complications that these softwares cannot handle. So there's some ways I'm going to have to manipulate the data, or at least be conscious that there is this assumption in Boldin that's not accounting for my particular case. So some other items that we discussed was he made brief comments on my asset allocation, the asset section, to make sure I understood my inputs were not being included as a liquid asset in that money flows chart. He showed me some of the more important charts and graphs, such as money flows and surplus graphs, and he identified any kind of anomalies in those graphs. He showed me how to tweak and change some of the inputs that impact those graphs, and how to look out for that, any kind of issues, any projected issues. He gave me some specific questions to ask my financial planner to know how to better update Boldin. He had no issues that I was not using a Boldin planner. He did ask. And I actually booked the planner I'm using before I decided to use a Boldin coach to view the technical side of my inputs. If I would have used a Boldin financial planner, which is significantly more cost, around $3,000, I believe it is, they would have complemented anything that they would be using the same software. The complication this causes me is my financial advisors don't use Boldin, they use their own software. But I prefer Boldin. When I looked at their software, I prefer Boldin. I think it's much more specific and a little easier to use. So we discussed the pros and cons of my wife not being included as one of the variables, since she's not a U.S. citizen, especially with regard to Social Security and Medicare. He was very apologetic. He had even suggesting the idea of removing her from my profile. It was very sweet of him to, I feel weird saying sweet. It was very sympathetic of him, empathetic, to suggest removing her as if she didn't exist. I said, it's okay, don't worry. I understand what we're doing here. And at the very beginning, he also explained how to toggle between present and future dollars, and how much of an impact that does have on the results. This is a screenshot of the video. This is him up here in the corner. This is him walking through different aspects of my account and my profile. And then at the bottom here, they send a summary of the discussion. And then another nice feature was, I didn't really have to take notes. So I did review the video a few days ago in preparation for this particular video, to write down some of the highlights of what we discussed. But they actually send, you can't even see what I'm pointing at here, they actually send the next steps of what his recommendations are for me to follow. So everything we discussed, I don't need to be writing anything down. And he was able to pick up on my knowledge right away, what level I was at understanding what he was saying. So the experience itself, so he came prepared. He asked if I had any initial questions right from the beginning, and we did focus on that. He clearly reviewed my profile ahead of time, and he had a list of points he wanted to make ready. Because we talked for so long, he went over time. But he was patient, he was calm, there was no pressure of time. It was only when we were at the 70th minute that he realized we went well over the 50 minutes that I paid for. We were together 73 minutes. So it was a very good deal. 1 hour and 13 minutes. So I also received a full recording of the video that I just reviewed. And then he sent this next step checklist. He was very apologetic for having to go. He was very sympathetic to make sure I understand and he wanted to understand my specific situation. He even thanked me for the work that I do. He asked me, by the way, what do you do? Because I am an anomaly. I am an unusual example of someone he probably talks to on an average. And he just said he thanked me for what I do, so that was very nice. But he gave no indication that he was pressed for time. He just said thank you, and sorry He actually apologized for going overtime. I didn't feel like I was being sold something. I felt like I was actually being helped. So was it worth it? For me, yes. It wasn't because I wasn't familiar with the software, because I don't know my own blind spots. If you're making a big retirement decision based on projections, especially if you have complexity, like living overseas, multiple accounts, IRAs, and maybe even a spouse who's not a U.S. citizen, a second set of eyes might be worth more than you think. The software is powerful, but assumptions drives the outcomes. Garbage in, garbage out. So I'm sharing this just not as advice, but just as a process earlier in retirement. The earlier you get started on this and familiar with the software, the better you are, the more advantage you have. Let me know if you've ever had any professional review your plan, or even your Boldin account, or if you just trust the numbers to do it on your own. So one more thing, just as I'm concluding here. After my session, I came across an article that caught my attention. It referenced new data showing that Americans who work with financial advisors have more than double the retirement savings of those who don't. The numbers were pretty striking. So, for example, people without advisors averaged around $62,000 saved in their financial plan versus those who worked with advisors averaging around $132,000. So obviously correlation isn't causation, but it does make you pause to think, should I get a second set of eyes on this? That same study said that the average American thinks that they need about $1.4 million to retire comfortably, but most people aren't anywhere near that. Social Security replaces roughly 40% of pre-retirement income. Inflation continues to erode that buying power. So the gap between what you need and what you have is very real, and it needs someone to look into for you if you can't do it yourself. Some of the things that the article highlights are people who work with advisors are more likely to have a long-term plan, account for inflation, plan for health care properly, like I didn't. And it showed me I need to look more into this seriously. Prepare for longevity risk, maintain emergency funds, and understand spending versus saving. So that's actually what my Boldin session reinforced. It wasn't about picking a better ETF or a stock or anything like that. It was about structure, my assumptions, and my inputs and my blind spots. So I don't think advisors magically create wealth. What they really do is reduce costly mistakes. They help you avoid inertia, and they research for you. They give you your professional advice, and they're there for clarity. So in my case, I'm pretty hands-on. I like to do this, even though it does stress me a little bit. I don't have $1 million, but I need to preserve what I have, and these little bit of cost for a financial planner and a Boldin coach, I think were worth it. So I like running my own numbers, but even then I benefited from someone reviewing the structure. Not everyone needs a full-time advisor. Not everyone needs ongoing management, but most of us benefit from at least an occasional professional review, especially when life becomes more complex. The older I get, the more I realize retirement planning isn't about chasing higher returns. It's about avoiding unforced errors, in understanding the rules, and being honest about my assumptions. Whether that comes from a software, a one-time consultant, or ongoing advisor relationship, the common thread seems to be this: people who engage seriously with their plan tend to do better than those who don't. For me, that $250 wasn't about outsourcing responsibility. It was about strengthening my own understanding, giving me agency in my own planning and my own costing and my own lifestyle. So if that helps me avoid even one single mistake in the next 20, 30 years, it probably paid for itself many times more than the actual cost. I'm just sharing my process. Let me know what your thoughts are. Do you prefer to manage yourself fully? Are you a DIY person, a do-it-yourself person? Do you like to have the occasional check-ins, or do you need ongoing advisory support like some advisors offer? So this is another installment in the personal finance series that I'm putting out. I hope to soon have results from my comprehensive financial plan to include in this. Take care, everybody. God bless, and take it slow.